Good evening. This is Tom Alexander. It is Wednesday, January 19th. It is 9:14 p.m. Eastern Time in the U.S. This is another special report, and I'm going to expound on the information that you should have received in the written report that I sent out. If you're not getting this written report, shoot me an email, tom@alexandertrading.com. I'll put you on the list. Also, if you find this information helpful, I would appreciate it if you would subscribe to the channel and like the video. Okay, we are coming into what I feel is a potentially really important low. As I said last night, I think this is going to occur soon. Price-wise, I'm not so sure I could make a great case for a washout for a few days. So let's just take a look at some charts and we'll discuss this. Okay, on my screen, you see the SPX. This is a daily chart of the SPX. The green arrows are monthly option expirations. I did not parse out the quarterly option expirations, but I did parse out each red line, each dot arrow you see is an option expiration. The green arrows are incidences of negative 2,000 breadth. Now, I've talked about this negative 2,000 breadth thing for the past 22 and a half months because it's been the gift that has so far kept on giving. Whether it's going to give now remains to be seen, or exactly in what form the present will be. But up until this point, every time we have registered negative 2,000 breadth reading, we've been within a few days on the outside of a very, very important low. In some instances, it was a momentum low followed by a slightly lower price low, but in no incident so far, with the exception of yesterday, have we exceeded the price low following a momentum low. We did that yesterday. We're also approaching a very, very critical downside level in the S&P near this SPX S&P near 4,500. That's a level that everybody and their brother is well aware of. If we trade through there, it's likely to be very volatile, especially intraday around that area. And the market is also very likely to move sharply away from this area, either sharply lower or reverse very soon and move sharply higher. Now, all of that's coming on the heels of this option expiration that apparently is a very large expiration on Friday. Now, as you can see here, most of these option expirations have been directly in front of pretty sharp moves, and in some instances, they've been within a day or two of market turns. We'll see. This is certainly setting up for that potential. Now, the indices have been extremely weak. Breadth has been extremely weak, which brings me to the next thing I want to show y'all. Now, breadth is down here, this blue line, this blue oscillator. This is basically, it's not an oscillator, it's actually a spread. It's NYSE advancing minus declining issues, ergo breadth. And here are the negative 2,000 readings that are clustered. And actually, there's another one that's right here that I don't have marked, and I'll mark it yesterday. So we have 4 in this area. Now, what I want to talk about right now are the moving averages of NYSE advancing issues. And I have placed a horizontal line where they are as of the close on Wednesday's cash session. And if you go back and you look, now that they're at extremes, the caveat here is that extreme is a relative term. But relative to what have been the extremes for the past couple of years, we're on the upper cusp of extreme, and we're also, this is coincident with market turns. It's also coincident with negative 2,000 breadth, but that stands to reason. This is the 5-day moving average, this is 10-day moving average. So let's just go back. Now remember, these horizontal lines that I have placed in here are where we have had, or where the moving average is the 10, the red is the 10, the green is the 5 as of today's close. And you can see we sort of flirted with it. This was a rather odd one. It stayed in this area for quite a while, and then it never got much below it before we had this ripping rally. And then we had a test of this low here, and we went a lot higher. And but before this time, almost coincident with the low extreme in this 10-day moving average and the green 5-day moving average, you formed immediate pivot lows. If this is a little more complex and compound, which it appears to be, we're probably somewhere in this phase in here. I don't think we're over here. I think we're closer to a resolution, a final downside washout. Now, this was an extreme that I don't recall ever seeing a more extreme. And of course, it occurred at the very, very close, within a day or two of the low of this correction. And that's what I think it was. I think we've been in a bull market since March 2009, but that's neither here nor there. But this was the most compressed selling that I'd seen in a short period of time in my lifetime. And I've been trading since 1985. And then if we go back and we continue to look at this, now I have something, let me make sure. I want to get rid of this. Okay, now, okay, let's just go back, and you can see how extreme it was here. And then you can see, around this level, there were lows, pivot lows going well back. This is 2019. Now, at the end of 2018, you got very extreme, much more extreme. So the point is that we are on the upper cusp of what could be an extreme. Now, if we are going to have some sort of real severe correction, and I don't, let's see what this was from top to bottom, from top to, yeah, if we're going to have a 20% correction, we're probably going to see something like this. But even if we're going to have a 15, 20% correction, you can see along the way, you're going to get these ripping rallies. This was about 4%. This was about 8%. This was another one about 7 or 8%. And then finally, you had a 12% decline, and then we were off to the races into this next significant. Actually, I don't think there's really been a more significant top than the top in 2018, except for the obvious, the March 2020 crash. So that's where we are. Now, I want to show you the profile view of one of the contracts. And this is the one that, for me, it really points to a potential really bearish resolution. Now, it could be very sharp and over quickly, but if you look at the Russell, this is a weekly chart. It's a weekly profile chart, meaning each profile unit is 1/4 of trading. So this goes back to the very beginning of 2021, and you can see we're close at the low extreme of this year profile, basically this multi-month auction. Below here, you really don't get much from a structural perspective until about 2000, and you could trade all the way down to 1900. Now I put that bar chart, let me find it here. I put that bar chart in the report, and I'll show it to you. Here you go. So from today's close, if we reach 2000, it'd be about another almost 3%. And if we went down to 1900, it would be just shy of 8%. Those are pretty healthy declines. Now, if that's whatever occurs in the next 2 or 3 days, I do think we're going to get a substantial rally. We could get a substantial rally and bounce very strongly from another 3% down, and then eventually reach 8%. But we finally have volatility. Everybody was bemoaning or began to bemoan the fact of new all-time highs week after week, day after day, month after month, wanting volatility. Well, here it is. Enjoy it. It provides incredible opportunity, particularly if you understand how auction markets work. And all the markets that we trade are auction markets. Bitcoin, corn, rough rice, the S&P 500, copper, gold, I can go on and on, natural gas, crude, etc. They're all auction markets. All auction markets follow the same processes of development in all degrees of time, all the time. Hope you found this helpful. Have a great evening.